Hello, everybody. Welcome to ReadySetCrypto. Today's Wednesday, the 25th of May. Welcome aboard. We're going to be starting here in just a couple of minutes. We'll go through kind of the top-down view of the market with Mav. I'll go into any requests that you have to talk about the market by ticker. And we'll generally wrap up in about half an hour or so from now. So do us a favor when you check in, go ahead and hit the thumbs up button. And let the world know that you are on board here with us here. So it tends to help others discover the fact that we're on and we can get a good crowd going here today. So also let us know where you're coming in from today. Where are you located? Say hi, and we'll get started here in just a minute. Okay, we got Kaza from Ireland, or is that Kaza? How's it going out there, Mav? What's happening in your world?
Oh, just watching the market kind of do its thing. But yeah, no, this is good. I think we're in a good spot here.
All right, we got Yo-Yo from Sheephead Bay, Brooklyn, Spain, La España from Barry. All right, John, I love the snow from UK. Whereabouts in UK you from? Hey, Rajith, how you doing? Yeah, everybody's good. This is just a phase that we go through. Just a phase to go through. Man, I can't believe it's almost June. Seems like this entire year we've been. Actually, it has been this entire year we've been in bear market territory. So this is just a phase. I counted up the other day. It's like ReadySetCrypto has been around for over 4 years now. And during the majority of that time, with the exception of 1 year, the rest of it has been bear market territory. Throughout the entire 2018, throughout all of 2019, throughout half of 2020, we were in the bear. And then we had 1 year to the upside. Into 21. That was a hell of a year. And then, since November, it's been all downside. Yeah, there you go. Ready, set, smash the likes. All right, London. Yeah, very good. It is a great place. It's one of my favorite places to visit. It's been 3 years, man. I feel like I'm going through withdrawal from London right now. All right. Hey, Mav, once you get kicked off here, let's get today started. And, as you log in and check in, again, hit the thumbs up button and we'll get you checked off here.
All righty. So welcome, everyone. And welcome crypto market. Look at that. We got some green. Oh my goodness. It's it's not much to talk about, but hey, anything to brighten up your day here. So but yeah, what's going on right now? So I think the market's kind of tentatively reacting to a little bit of the Fed news or the minutes that were just released and just the general malaise of things. We're just kind of trickling sideways, aren't we? And I think this is, we're going to see more of this, if not maybe a little bit more of a downward bias, just because there's just that much uncertainty and the market is fearful. And I think that's very much the intent of the Fed, because they've made their playbook very clear. It is their intention to, basically threaten, but really not follow through with this sense of curtailing the money supply. And I mean, we can speculate if the Fed are stupid or not all day, but I doubt that they're going to follow through on this. What's really going to take care of inflation, the thing that seems to be the specter that is, just it's got the market by the throat right now, right? It's what we've been talking about basically since this year started. The reason why we're seeing Bitcoin in an 8-week downtrend, something that's never happened before. Well, this is due to the way that the Fed is trying to respond, if not, I don't know. They do what they do. The machinations inside the Fed are unknown to us plebeians, but yeah, I think it's this question of are they going to continue to put out these kind of I call them blanks. But yeah, what is the case is that the market is ultimately going to be what stops inflation, not the Fed. They're just going to push the market in a way it's going to make it fearful. That's their secret weapon. Is they're going to keep stringing us along until inflation gets under control. People are fearful and are hoarding their wealth, or just trying to get ahead in this it's very antagonistic from multiple fronts. Cost of goods, housing, rents, everything is up, gas prices. And so when people are fearful in this sort of environment, they're going to protect their wealth as best as possible. And meanwhile, the Fed is going to keep doing what they're doing, which is raising interest rates. But they know that that is useless. There's no potential for them to raise the interest rates higher than the actual inflation rate. But they just pretend that it's going to do something more than be meaningless in order to get people to buy into this sort of theory or sentiment that, oh no, the sky is falling, everything is awful, inflation's out of control, the economy is never going to come back. Bitcoin 100K was always a pipe dream. This is what Doc talks about getting the majority, the most amount of people on the wrong side of the reality of things. And that's where perception is reality, if you want to think about it that way. There's a phrase out there that I think is very relevant to our current situation, in that the threat is stronger than the actual execution. And that's very much the case. That's the Fed's playbook right now, because they can never let the markets truly go into a depression type downspin. It's always going to be the case that they're just trying to keep. Think about it this way: if you're driving Doc's truck down the road and you need to come to a stop, you need to stop. In this case, inflation from going out of control. You need to stop the truck. You can either slam on the brakes and go through the window, and it's not good for anybody. Or you can try to tap the brakes and slow it down as gradually as possible. And that's kind of what the Fed's doing here. Is it going to work? Is it going to play out over the course of this year in the way that they want it to? Are we going to see in the tail end of 2022 the majority of these blocks here turn green? We'll see. I think it's definitely been the case that we've been in sort of this holding period. We call it like a spring that just is getting tighter and tighter. This is what, as Doc was just mentioning, we've been around a couple times now. We've seen something like this before. We've seen market cycles like this where the market is very primed to move in a direction that is reciprocal to, hey, if there's a signal that things are going to start rebounding, that the Fed is easing off in terms of interest rates, then money is going to be pouring into what I put out in our Omnia newsletter a couple of days ago, breaking down what Anderson Horowitz and A16Z's sort of state of crypto, what they're targeting for kind of the next big thing in crypto, right? And this is, to get today's stream topic, this is where the smart money is going. This is where they're pulling their resources right now in anticipation of, hey, let's call it like the end of 2020 into 2021. What happened with like NFTs, right? Where there was a lot of dry powder set aside that went into NFTs, for better or worse. And we're probably going to see the same thing happen with Web3, to a lesser degree, DeFi. and to a lesser degree, NFTs and sort of hybrid solutions. And importantly, all that's driving all these things are the smart contract platforms. The Ethereums, now that it's getting closer to the merge, your Solanas, your Avalanches, not your Terras, but certainly it's going to be the case that whatever is capable of pushing forward this Web3 narrative, that I think is going to be the next big thing. That's where the smart money is coalescing. That's where you're seeing like Cardano start to really soak up more attention as it relates to things like this. So this is an excellent report. I can't really get behind the design of it. It's a little all over the place. It's like confetti or something. But if you actually look at the data and what's going on here, and if you need like a reassuring positive note after what has gone down over the last couple of weeks, especially, this will help you through that funk, because this is admittedly a little bit biased, especially towards Web3, but this is really good stuff. I love reading reports like these that really just cut through the noise and say, hey, if we look forward, if we look at the technology adoption curve and the innovation that's going on in the space, and we look at what's driving value, what is building innovation platforms that we're going to see the next big things come out of, that is exactly what Web3 is going to represent. That's exactly what all the platforms you're seeing here are going to represent. And that's why the smart money is starting to coalesce around them.
Is that being put out by Mark Andreessen?
Yeah. Mark Andreessen is behind A16Z, who is the fund that's behind this report. It pays to listen and pay attention to what the hedge fund, the VC kind of guys are doing, especially now that we've seen what's gone down over the last couple months, right? In terms of the tech sector has been obliterated. There is I was in San Francisco a week and a half ago, and it was just a gloomy place. Everybody seemed really panicky because like right now there's hiring freezes and layoffs going on in tech, and it's just not a good time. But if we look forward and say, okay, let's put the clock, or put the calendar a little bit forward here. If we get back to a place where there's a market that's supportive of these speculative assets, these sort of new endeavors like this, where is that going to, where is going to be focal points of that energy? Where are we going to see a similar sort of trend as March 2020, which is something that is being kind of related to right now in terms of the fear and greed index. We haven't seen levels of fear like this since we saw the initial COVID drop in early March of 2020. But importantly, is this a market? Are we in circumstances that are similar to March of 2020? Yes and no, but I don't think we're going to see sort of the supply side issues that we were seeing going into coming out of March 2020, more specifically. I don't think we're going to see the same sort of supply side or supply chain and demand sort of shock that we saw at the time. We're just in very different circumstances here. So, am I saying this is overblown? Yes and no. But I think what's very quickly going to be the case is the market is looking for opportunities to get back into an opportunistic sense. Yes, we do need to have a little bit of a forest fire here. We need to pump the brakes a little bit. Always expectations seem to get outside of reality. But I think if we continue to see where the trend's going, and we continue to see what the market is got in store for us, and especially if we're looking forward in terms of the trends around crypto right now, again, paying attention to these Web3 platforms, paying attention to the scaling sort of tech and releases that are going on right now, this is the big thing right now, or it's going to be leading down the road a little bit. So that is it from my perspective today. Now I'm going to turn it over to Doc as soon as I can. Stupid Zoom. It always does this to me.
Yeah, you got to go find the green thing.
Yeah, I know. Yeah, what are you seeing from your perspective, Doc? Well, I have some technical issues.
Oh, okay. I
It's an
will.
optical illusion.
All right. Let me go grab this thing here and I will go charts. All right. So you got about 10 minutes to fix your stuff before it's coming back.
Appreciate when I follow Grace there. Thank you.
Okay. Okay, so the first thing chart I'm going to look at here is the 10-year Treasury note, and this is the real proxy interest rate. So when it says like 2.7 here, that's 2.7%. So we had rates going higher for a while on the Fed, the speculation that the Fed was going to be raising, and now that the Fed has every other day is saying, "Hey, we're going to be raising now." It started to come down. And the reason why it may be coming down is because we're starting to see the economy soften everywhere, much like what Mav was just talking about with things. So things happen really, really fast these days. It's the market's not going to wait until we get a confirmed GDP, which is negative in the second quarter. And we wouldn't know that until sometime in July before the market's going to discount that potential result. So if the market does sniff that out, and it will sniff it out well ahead of time, then we'll see these things. Now, what I want to see right now, and even though this doesn't sound right, is I do want to see interest rates continuing to grind slowly higher, because I don't want the market to get out of sync with the Fed. If the Fed's, which is down in this area, the Fed's down here, whatever, on 1.5% right now, and the bond market's up at 2.7. So there's a huge disconnect. So I want the Fed, who obviously wants things to go higher and has to wait every 6 weeks before they do anything with this. If the market is going to lead them, then that's good because we have sync there. If we're going out of sync, this is a bad thing, and we will continue to see pain and selling. The beatings will continue until morale improves. So that's something you might want to keep an eye on, is just watch what's happening with the proxy interest rate that's out there. The second thing I want you guys to keep an eye on is the much, much larger NASDAQ 100 market, which, as Mav talked about, is also in, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 8 weeks to the downside. Now, after 3 days, we're slightly positive here. I think that may be a mirage, because NVIDIA reported after the bell and is getting taken out behind the wood set and, smoked right now. So I don't know if this is going to continue, but it has slowed down. But as goes the NASDAQ, goes crypto. As goes the NASDAQ, will go crypto. So if the NASDAQ is able to break this descending trend line and start to rally higher, which I believe we are going to get about a 2-month summer rally. It's going to be a very grinding thing. It's going to be ugly. And then one of two things will happen from that point. Either we are going to bust a move to the upside because certainty is coming back to the market, or the second leg of the bear will kick in. And again, so goes the NASDAQ, so will go crypto. So watch this carefully. If we get that break in the descending trend line, we'll probably get a very slow grinder to the upside. It's not going to be a V bottom or anything like that. It's going to be a slow grinder, and that's going to be a platform from which we will either explode or we will see the second much, much worse leg down. We have not truly seen a bear market in the equities world since the 2007 to 2009 timeframe. We've been through technical bears, which are, people call them 20%. To me, it's not a technical bear. If you went through the 2008 bottom, that's what a bear market looks like. The 2000 to 2002 tech bubble popping, that's what a bear market looks like. So we could be seeing that again. But again, crypto will be derivative to what happens in the larger markets. Okay, so enough of that stuff. Let's go into looking at some of the coins you guys want to look at. And the first request I got was for Luna. And this is not crypto, so let's try this again. Luna versus US dollar. So how bad do you want it? It's flatlined. I think version 2 is going to be released at some point here in the next few weeks. This one is dead. So say goodnight. All right. The next one here is Oasis. We are looking Rose versus Tether. Ooh, and we're getting about the same pattern. Doesn't matter whether we're looking at Bitcoin or anything else. We're getting range expansion, range contraction. What I want you guys to be aware of is on BTC, we have an enormous amount of energy right now. And this could break either way. This could break either way. To me, if it breaks above 32, we have half a shot of getting up to 38. That may just be a lower high. I don't know. Otherwise, this is a bear flag, and it should be expecting to break down and maybe hit 20,000 like Rajith was talking about. So Rose is going to have essentially the same looking pattern. Everything's going to look the same right now as Bitcoin, right? So it's that bear flaggy looking thing. So Rose, if it's able to get above 9 cents, might be a buy. Okay, so we're going to go back over to price, go back to the sheet here. I'll see if I can find some of these. SDAO, Singularity. Let's try this one versus Tether. Okay. Not looking good. Nothing is going to look particularly good, right? So what I want you guys to do, and I'm going to be very consistent about saying this, is if you're in it, then you should have had a stop level, or you've got such a long time horizon that you don't care, right? So if you're not in it, and if you're looking for a way to get in it, then wait for, like some of the discussion that was in the chat room earlier, wait for this thing to start showing, or the bleeding to stop, right? Wait for the price to start showing a weekly higher highs and higher lows. If you don't know what that looks like, just put the Heikin-Ashi candles and buy when it turns green. Maybe 2 weeks of green, you can buy. Okay, so that's one cheat code for you there. Okay, so that's Singularity. And nothing is going to look particularly good today. KDA versus Tether is also getting taken out behind the woodshed. So again, if you're not in it yet, one of the cheat codes you can use is you can wait until this descending trend line is broken. I would wait until it gets above 3.5, because that would show that this is a higher low, higher high. Right there is your first possible entry, is at 3.5. If you want to look at something like that. Okay, next one we have on the list on our request line here is IMX versus Tether. And looking the same. Everything's showing this. This is a bear flag. This is what a bear flag looks like. It's a very slight rally. It forms a halfway house in the middle of the next move. So by extension, the measured move is going to be down in this area. This is typically what a bear flag looks like. However, I've seen plenty of these things where everybody's getting ready for the bear flag, and it starts to break to the downside, and then it does whoosh like that, because it loads up on these weak hand bears that all have to squeeze out. And this is why we get these big moves. So keep that in mind, that you could get the fake move there. Okay, so that was IMX. Let's see if there's anything else that came in. Let's see. MXC, most extreme challenge, right? MXC token. Okay, so this one, and if for some reason I skip over your chat in the room, please just post it again and just give me the ticker. So this one is, this is one that we looked at, and I was like, as long as this is a bang this trend line, you can stay in it. The second that it goes below this trend line, get the hell out. So right now it's trying to stay above the 200-day moving average, but it's fighting gravity at this point. So I would have been stopped out long ago from this one. Okay, let's see what the next one here. In these times, is it best to pair everything to BTC instead of USD? No, I will always say pair it against Tether if you just want to, if you want the most objective look at it, because if Bitcoin is going down, then that's not a base currency that you want to be looking at, you know, because it's going to drag everything down. So I would still stay with Tether, and that's the most objective way to look at these things. Okay, Chainlink. Chainlink has been requested. Okay, so Chainlink not looking good, in a pretty wicked trend. Chainlink was one of our rock stars for quite some time, and then it set up a lower high in the monthly chart, and it was over right there. It was dead, toast, right around the November timeframe that everything else died. Okay, so right now this is on the avoid list. Stay away from it until it starts to trend higher on the weekly chart. Okay, Celsius. So we'll try Celsius here. I'm going to do this one versus Tether. And this one did fail. We looked for a buy point on here, failed. So this one's on the avoid list. It's in a weekly downtrend. Wait until this turns around. All right, next one is Aave. Do we have, is there anything besides Tron, which is actually heading higher right now? Tron is the market leader right now. Okay. I think the world is upside down sometimes. Okay, so here's Aave, and this is the trend line that we set up. So stay away from this one until it breaks above the trend line, starts throwing off higher highs and higher lows. That's a weekly chart, so it's starting to show a little bit of strength off the bottom. But once again, that's more of a flag pattern than anything else. Okay, I thought we looked at KDA. We may not have. Yeah, KDA, yeah, we did look at this one before. Oh, the truck finally came in, Aussie. Can we check, let's see, Marcos is asking, can we check the S&P 500 IV to the upside and downside? Is that IV that you're looking for? I'm not sure if that's IV or level. I'll wait on your reply on that. Yeah, forget about Chainlink. Yeah, scary when Tron is leading. Well, I'll just bring up the VIX here, which is the fear index, in case that's what you're looking for. Okay, the CBOE. So right now, what we're seeing is we're actually getting a little bit of positive divergence. Okay, so the S&P 500 levels. Okay, so let's do this on the ES. And I'm going to go to the futures on the ES. And I'm actually going to go over to gold as well, too, because somebody was talking about gold. So what you want to watch for here on the S&P 500, we're getting very, very close to a breakout. Now, if we look here at, let's go to indices, and then I will shut things down here in a second. We actually do have potentially a breakout on the Dow. So the Dow may be the first one to break out here. We're actually getting a breakout above the trend line. So if we look at the S&P as well too, the S&P is almost at a breakout point today. And it's starting, the carnage is starting to slow down. And what I'm also seeing is, what you want to look for is candles like this where we go much lower during the day, but then recover into the end of the day. And we've seen quite a few of these lately where we go much lower during the day and then we recover higher into the day. So to me, these are leading, the NASDAQ especially, but the S&P is going to be leading the crypto market to the upside. If these rally, and if these rally strong, we'll see crypto also starting to put in higher highs and higher lows. So that's just something to keep in mind. Something to keep in mind. All right, two more here, and then we'll knock it off for the day. Get you guys on your way. Okay, so let's see. Airweave versus Tether. Okay, I believe that's the correct symbol. So this one again, wicked downtrend. There's no escaping that wicked downtrend. Until this breaks that downtrend, stay away. Let everything bleed out. As I forget who was saying that, whether it was JM or our Florida attorney, one of those two. But let it bleed. Let somebody else take the arrows. And then I'll finish out today with VeChain. VeChain. Okay, so once again, we have this trend line here. Stay away from this one. If this trend line is above your price, this looks like a bear flag, looks like the release should be to the downside. Nobody ever rings the bell at the bottom tick, so nobody gets a medal for getting the bottom tick either. So there's no heroes in trading, right, guys? So keep in mind that just because something looks like it's low doesn't mean that it can't go much, much lower before it's finished selling. And this is the main thing behind bear markets, is that they destroy the hopes of so many people that were looking to buy the dip. They buy the dip, and then all of a sudden it keeps on going down. So keep yourself safe, keep your powder dry, wait for those historic opportunities when the market does actually start to turn up and starts to work higher. And then you'll be in excellent position. Will you get the absolute bottom tick? No, you will not. You don't want the absolute bottom tick, unless you want to just make a, cool Instagram post or something like that. But it's not the way that pros trade. The pros are looking for just the meat of the swing. We don't want the bottom. We don't want the top. We just want the meat in the middle. That's it. Chew the bones off.
Well said.
Cash is king. Well done. All right, everybody. Thank you very much. Mav, you got any final thoughts for today?
Yeah, I'm just going to quickly respond. Someone brought up a really good point, and maybe I'll just reiterate the topic of today's stream in terms of like, how does the smart money operate in the crypto space? Let's do it in like 30 seconds here. So here's what you need to do. You look at any SEO tool in terms of like, what are people searching for? In this case, I'm using exploding topics because it's great. And it's using Google search volume. And here over the last 5 years, I'm looking at the keyword crypto is dead. And here we can see, let me zoom in so you can see it even better. But going into 2018, through the course of 2018, lots of people talking about crypto is dead. Going into 2019, and as we talked about last week, December of 2019 was, December of 2018 was when Bitcoin bottomed. It was like $3,000, something like that. And then it just, by the time 2020 came around, by the time we saw the markets kind of turn around, that's when we saw this sort of stop being, having search volume and people talking about crypto is dead because now the price is up. But the inverse is true when the price goes down. And right now we are seeing the most we've ever seen in terms of people talking about crypto is dead, writing crap articles about that. And so you just need to play an inverse of that. And going into, also we use the fear and greed index against the price of Bitcoin. Anytime you see a clustering of like super negativity like this, these red dots versus Bitcoin's price, also a extremely like positive buy signal. Obviously Bitcoin can continue to go down and it probably will. But combining that with what we talked about during today's stream, look at what the VCs are doing. Look at what the hedge funds are doing. Where are they investing? What's the trends they're paying attention to? If you are investing in what they're investing in right now, if you're getting behind Web3 and Metaverse, because I know that those are not going to do very well right now. Those coins are going to actually be really tough to hold on to. But if you are like smart about what you're getting into, if you're intelligent about what those projects entail, who are the leaders in Web3 and Metaverse and things like that, if you get into that now, while the market's very depressed, while things are in this state, when the markets do eventually turn around, when we get, Q1 of 2021 kind of event, that's when you're going to make the maximal amount of return. It's during bull markets where we see some riches made. It's kind of like a gambling casino kind of environment, but it's during bear markets like these that the actual wealth is built. This is when things are being put together. This is when, as we were talking about, the platforms are building the infrastructure that's going to allow Web3 to be a mega trend for crypto over the next couple of years. This is the stuff you got to be paying attention to. And it's not that hard when you just kind of cut through all the noise. Don't pay attention to the Terra stuff. Don't pay attention to like right now, the like Steppen, like sweat coin are coming back from the dead. Just like, this is just stupid. Like no one, it's never going to see adoption. It's just taking up noise right now. Cut through all of that and you'll be better off for it. So that's all I got for today. Hope you guys are doing well out there, and we'll see you next time, same time, next week, same time. But until then, Doc, you got anything else?
Oh, no, I just, always an excellent opportunity to let you guys know about, some of the free services that we have, like at ReadySet.trade.
Mm-hmm.
If you want to learn how to trade. And, today I was given a presentation on just the mindset of things and how to think through this differently. And this is really the big key. This is where the edge is. This is where the smart money is. When you start to think differently about what's happening in the markets. And it requires you not to ditch your herd mentality and start to think differently, which is what Matt was just talking about. So looking forward to helping you guys in any way that we can.
As always, appreciate you being a part of this community. And yeah, hope you're doing well out there. We'll see you soon. And hopefully by then we'll see some absolution in the market. This sideways stuff is kind of boring. But until then, guys, take care out there. Cheers.
Adios, amigos. We'll see you around.